let me first sort of give you how our disbursements panned out in Q3, and in spite of some of the difficulties that we have seen in some of the sectoral difficulties, L&T Finance actually disbursed 15,210 crores in the festive quarter, which is actually our highest disbursement ever. And our AUM growth rate also has been reasonably okay at about 23% on a year-on-year basis. However, yes, you are right. There were two things. The first and foremost thing, we saw certain ongoing challenges in the microfinance sector in terms of asset quality. And because we are a significant microfinance player, we cannot be immune to the same, though our sort of pain actually came from more of the macro-related disturbances like heat waves, etc., and the floods. Actually, we had floods in Q3. Wherein in the month of October we had very, very bad floods in Bihar, right? And that displaced a lot of people and also impacted a lot of our collections efficiency. So some of those macro-related challenges actually continued through Q3, and some of the sort of the flows that we had seen emanating in the beginning of Q1 and Q2, actually those flows started actually, coming into the sort of the final provisioning stage. So obviously that has given to a rise in credit costs during this quarter. Also, what we have done is that we have tempered down some of our disbursements and taken the guardrails up, especially in the microfinance sector. Also in the two-wheeler business, for example, we focused on tightening our throughput quality, etc. So overall, we have been doing a lot of work on the credit side just to make sure that while we grow, we navigate the environment effectively by taking the guardrails up, and because of the reason to sort of temper down our microfinance business, that has sort of given an impact on the overall NIMs and fees, because the composition of the disbursement as well as composition of the book has slightly changed. And as you know, microfinance is a high yield, business. So as the microfinance disbursement has got tempered down this quarter, there has been a little bit of a sort of a tempering down of our NIMs and fees trajectory as well as I have told earlier, there has been an increase on the credit cost trajectory as well. So overall, a tough quarter, but I'm quite and as I went and as we said in the press release, that we are quite happy that our teams have managed to navigate this difficult situation quite effectively.
Fair point. Okay. How long do you expect this pain on the credit cost front? Let me just cap off that point. Couple of quick questions on that. So how long do you expect that pain to continue for?
See, one of the things is that we have seen, especially in the microfinance sector, we have seen some green shoots in December, and we continue to see a holding pattern in the month of January. We saw our collections efficiencies go up in the month of December. Because the situation in many of those flood affected areas in Bihar improved, and so collection efficiencies came back. Plus overall across the country, collections efficiencies in most of the geographies seem to be on a sort of a stabilizing or an upward trend. Obviously we have had very good kharif crop. The rabi sowing has been good, especially in the rural sector. So we expect that the rabi crop will also be good. So we expect that the rural liquidity and the rural incomes will have a positive trajectory in Q4 FY25, which augurs well for the rural sector. We had a record month in October and November in terms of tractor disbursements. So there has been very, very good tractor disbursements. So that is also another green shoot which gives us a bit of comfort. However, it is very difficult to put an absolute pulse on whether this entire situation is fully over. We are optimistic that we are seeing the first signs of the bottoming up of the microfinance credit crisis for especially the players that have very well-run franchises and have bought strong credit guardrails. And we are hopeful that things will continue improving from here, leading us to a much more normalized trajectory probably in Q2 FY26.
Okay, so point taken. So you've spoken about MFI, you've spoken about Bihar. So those are two key areas which are dragging your numbers. Any other area, sector which is currently a possible concern currently as of Q3 or going forward that you are starting to see concerns in?
Concerns, see,
from an asset quality standpoint, yeah, from a from a collections?
No, from an asset quality standpoint, we remain focused on what we call our rural business finance, or otherwise known as the microfinance segment. That is the segment that we are focused on. We have been doing a lot of work on the credit quality side through our digital credit engines introduction, in Q1 and Q2. So more or less, I would say that the credit profile of the other lines of business are in line with industry parameters or better than industry parameters. So that the details of which we have put it in our analyst deck. So as of now, we remain focused on stabilizing the sort of the credit trajectory in our microfinance business. All our businesses, other lines of businesses, more or less are sort of pairing close to the industry performance or better than industry performance.
Fair. And with regard to microfinance, you've toned down on the disbursements, and therefore you suggested that margins have come off. Do you expect this to be the normalized margin plus other income kind of trajectory, which you are currently sitting at 10.3% versus the nearly 10.9% number same time last quarter? What's the sense like? Is there going to be further calibration here?
So we had guided saying that during normal times, that means in times where we do not have stress on any lines of business, we will try to keep our NIMs plus fees in the range of 10.5 to 11%. Now, obviously, these are times when where there is some sort of macro headwinds in certain lines of business. So obviously that has led to the tempering of the NIMs and fees. As and when, while we are doing this, we are also trying to sort of expand our business in the non-leveraged customer segment as well as in new geographies like AP and Telangana, Western Maharashtra, Eastern UP. So in the microfinance business as well, we are also trying to make sure that, we do not slow down the engine so much that it has a meaningful impact even on our go-forward trajectory. So what we are trying to judiciously balance between, quality and growth, right, with a focus on quality. Right now, but also keeping an eye on growth as well. We are hopeful that, if the sort of the current sort of trajectory of stabilization that has been visible for the last 45 days, if this continues, then probably, we probably can get to a normal growth trajectory sometime in the latter part of QI FY26 or, Q2 FY26. So obviously, we do expect that as things normalize, our NIMs and fees trajectory to come back to the guided trajectory of 10.5 to 11%. We are also working on several fee-generating initiatives. As you know, we have now got a insurance distributor license wherein, we can now sell insurance to the entire sort of life cycle of the customer, which we could only previously do at origination stage. So we are also looking at diversifying our fee profile as well. And I do believe that as things normalize, we will get back to that guided trajectory of 10.5 to 11%.
And this is, so the recovery that you might or you are anticipating in Q1, Q2, FY26 is a function of microfinance recovering. Just trying to clarify for viewer perspective.
It's a function, majorly a function of the microfinance recovery because it's a very large line of our business.
And that will bring down credit cost as well. So it will be a double positive for you if that were to play out.
Yes, from a bottom line perspective, it should be a double positive. But as I said, we have to see how the numbers are panning out in Jan, Feb, March in terms of collection efficiency and probably in the early parts of Q1 FY26.
Fair point. Okay. Your ROA number has been slightly volatile as a result of all of these moving parts. Would you want to give a more steadier ROA in terms of the way in which ROA QOQ moves? And what will you do in that sense to try and bring it, and how quickly can you bring it to that steady state number? Whether it is 2.5, whether it is 2.3, whether it is 2.8, whatever that number is, you guided for 2.8 to 3, but is there some way in which you all are going to bring more steadiness to the numbers?
See, there are only, obviously, given the fact that, disbursement is something that which we have in your control and your disbursement engines can be easily fired up or, sort of calibrated according to the credit environment. I think the two sort of major sort of lines which have a outsized impact on the ROA trajectory is first, obviously, your credit cost, and secondly, your cost of funds profile. Now, the fact is that if you see our cost of funds profile has been very, very stable for many quarters. Currently, this quarter, it's only a 3 basis points growth over last quarter at 7.83%. So I think the real the big block that we as an organization are going behind is the credit cost block. And we are doing lots of things to make sure that the credit cost trajectory becomes more predictable and more stabler in going forward. Right, and it is not only in the microfinance business, but in all lines of business, we are doing a lot of work to make sure that the credit cost trajectory becomes more and more stable. As the credit cost trajectory becomes more and more stable, the ROA trajectory will also become more and more stable, and the volatility in ROA that you referred to will probably be a thing of the past as the credit cost trajectory becomes more stable. So obviously, we are going through a little bit of a challenging macro phase right now. And I do hope that as things stabilize, the credit cost trajectory will come back to its normal sort of guided pathway of 2.8 to 3% as we have taken as per the Lakshya 2026 targets.
Right. And, you've utilized around 100 crores of macro provisions. Could you give us the rationale for that, and therefore how much of macro provisions are you now sitting on as a result of this utilization?
So overall, we had created a macroprudential provision of about 975 crores during the COVID period out of operating profits. And we had told ourselves very clearly that this is specifically for the microfinance business and to be utilized during situations which are macro situations and which probably is not part of BAU business. So we've seen some of those macro situations play out during this year in the preceding 3 quarters, and so our board was satisfied that the condition precedents were met for utilization of some part of the macroprudential provisions. What we have given a guidance is that this quarter we have used 100 crores and we have released 100 crores of macroprudential provisions. Next quarter we have given a guidance that the macroprudential provision utilization will be between 300 to 350 crores. Obviously, our endeavor will be to see if we can use less. But the fact is that this is the ballpark range. So about 450 crores of macroprudential provisions will be used between this quarter and next quarter. So obviously, our overall provisions were about 975 crores. So,
all right. So that's Sudipta Roy of L&T Finance speaking about the numbers. The numbers have been less than exciting, but the stock is up nearly 2%.